We do have a guest speaker today, guys. You know, for the majority of part of this year, we have focused a lot on non-QM, right? So you guys are already now familiar with bank statements and P&Ls and VOEs and VSERs and the vast, difference in guidelines from lender to lender and even within its own product, right? With ratio programs and no ratio programs, the different expense factors that are allowed. Champions has always been one that has been kind of on the edge, if you will, of and Timothy, as he can speak further into this, but they are pretty aggressive. They've got a bigger appetite in a lot of things that perhaps a lot of other lenders wouldn't even touch. So without further ado, he is our new AE4 for Champions. So let's give our undivided attention to Timothy.
Appreciate the introduction there.
Yep.
Pleasure to meet everybody. So I'm Timothy Mendoza here. I'm a account executive over at Champions Funding. So I'll be going into some new guideline updates that have been, released here at Champions Funding a few weeks ago that can, hopefully benefit you guys here moving forward and, for the rest of the year and then, obviously the year after. So definitely have some niche things here. Let me see if I can share my screen so that way you guys can kind of see what I see here. Patience with me. This is a little new to the Google Meets thing. How's everyone doing today? Love to see it. All right. So I appreciate the introduction there. Champions Funding, we have a lot of niche products here that can help qualify your clients when they may not qualify elsewhere. We do a lot of loans here at Champions Funding when it comes to self-employed borrowers. If you guys are dealing with any kind of self-employed borrowers, and you guys can drop, I wish I could put the chat up here, actually. I don't know if that's available. But I'll send you guys my contact information if you guys happen to have any questions. But self-employed borrowers, we do allow for borrowers who have 2-year history here at Champions Funding. The way we can help qualify self-employed borrowers with more income here at Champions Funding, we have a 25% expense factor by default with no CPA letter. But if they happen to be business owners of the the entity, the LLC, whatever the case may be, C Corp, all that fun jazz, then we can go down as low as 10% qualifying income for your clients, which, you're evaluating up to 90% of what they're getting in their monthly income on their bank statements. We do have an alternative bank statement program. From case to case, I do run into situations where clients have agreements with certain contracts where they can't disclose certain line items or due to their contracts, and it would cause a whole dispute. So our solution to the alternative bank statement program is actually we can just go based off the summary page. So it's just going to be beginning and ending balance with deposits. If we can indicate those, or we can just basically qualify their income based off that summary page alone. No need to get additional documents pertaining to bank statements. We can just take the summary page. We can even do an income calculation based off of that and qualify your clients in that way. This definitely helps those clients who are a little bit sensitive on sharing all those documents essentially. And so definitely helps a lot of borrowers in those types of situations. And we do allow for dispensary employees as well, those who happen to be seasonal and or in between jobs, on sabbatical, things of that nature. We have other ways to help qualify those types of clients. I'm sure you guys are aware of the no ratio program here at Champions Funding. The no income, no employment, we're not looking at either or DTI is also completely eliminated from the factor. So I have run into cases where, borrowers tend to have, DTIs in the high 50s, 60, 70%. More often than not, we can actually get those approved because, DTI is not a factor. So long as your client has, the quality FICO score to help qualify them for the loan. We're only looking at assets. We're only looking at, FICO score and active trade lines. If they have 3 FICO scores reporting, we can actually eliminate the request for trade lines in that sense. So definitely a good program. It's not a forever loan. The no ratio program, it tends to be a little bit of a higher interest rate than other products here. Typically when I get no ratio scenarios, I like to look into like what other options we may honestly have to help qualify your client. More often than not, it's like a self-employed borrower who's looking to get a home. They can't qualify enough income. And that's when, you know, if they happen to be business owners, that 10% expense factor is going to help them qualify for interest rates anywhere between the 6 to 7 versus if you go Ally, then you're looking into the 8s or 9s. So, you know, there's definitely alternatives to not just using Ally. It's a little bit of a higher interest rate, but, you know, there are ways for us to kind of work around it if we happen to look into other avenues. So, that's the Ally product here at Champions Funding. You can also use gift funds for down payment and closing costs. We just cannot use it for reserves. It's a very minimum documents too. It's closes pretty relatively quick. We only really need last month's bank statement just to show the reserves. Reserves, I got to make edits to this, but reserves is going to be anywhere between 6 to 9 months. And then on first-time home buyers, this is actually one of the newer things. So if you have a first-time home buyer, kid living at home with his parents, you know, wanting to purchase, you know, first home, can't qualify, you know, income-wise, we can actually utilize this for a first-time home buyer. But the first-time home buyer only needs to show 2 months of reserves. So that's a new thing Champions Funding has released here in the last few weeks. So reserves can be obviously whatever they have in a banking account, but you can also use stocks, bonds, 401k. Even if they're not of retirement age, you can still use up to 70% of the value in there to help, you know, get them into the home of their future. And so for all of our consumer loans here at Champions Funding, you know, we do allow for foreign national borrowers here at Champions to be able to actually purchase a home as a secondary residence. That is something completely new that we now allow for, you know, people in Canada, Mexico, you know, one of those neighboring countries, and even, you know, certain countries in Europe, to actually purchase as a second home rather than an investment property. This kind of helps them get their, you know, their first steps into, you know, the country here at Champions or here in the U.S. So definitely have alternatives for foreign national, even if it's, you know, investment. We also allow that ability for them to purchase it as a second home. Maybe they want to, you know, they come here 6-7 months out of the year on business trips, whatever the case may be. They're now eligible to purchase, you know, properties as a secondary home or a secondary residence. We do offer super jumbos too. So the new loan max here at Champions Funding, you can actually get to up to 5 million. So if you have anything as far as like those larger valued properties, we definitely can make it work. For as far as exceptions, we go up to 6 million in certain cases if the borrower is a strong candidate. I know a lot of these parameters, you know, you see the maxes, but we do allow for exceptions outside of these if it comes to it, if we need to go higher when it comes to loan amount. LTVs is a little harder to get accepted as far as exceptions. So that's just something we would have to chat with, kind of see what quality of borrower you guys may have in front of you. And then we also allow for I-10 borrowers to purchase home. We have a new program pertaining to I-10 borrowers to where we don't even need to look, or not look, but if they don't have, wrong program, but if you have an I-10 borrower who doesn't have a FICO score, like they just got their I-10 number, let's say hypothetically, and you know they're looking to purchase a home, we can actually qualify them based off not having a FICO score. So this will put their max loan of value, so 80%, so 20% down as an option, and they can even do a cash out here at Champions Funding if you guys happen to be coming across I-10 borrowers who are, you know, looking to purchase a home. So definitely have a lot of niche things here at Champions Funding that can benefit a lot of your clientele out there. We have programs with a little as 10% down when it comes to full doc products. So your W-2, your retirement, your tax return, we can do up to 90% on those. Bank statements, you're going to be capped at 85% with the quality FICO score, qualified FICO score. So if your client has a 720, we can do as little as 85%. I was just seeing if there's any questions. Anyone have any questions pertaining to like any of the loan programs or anything you want me to go into deeper before I go into like DSCR or?
Yeah, Timothy, I do. Yes, regarding your Ally program, just to confirm, it's 20% down payment, and it's low. And can that's 20% down payment? Does that qualify on a 660 FICO score?
So I'll show you the matrix here. So this is the matrix for the Ally program.
Okay.
We can go as low as 620, but we're asking for a hefty down payment. You're pretty much just buying the house at that point. But to qualify for a 20% down, you're going to be looking at a 720 score.
Okay.
You can do it to, go ahead.
At the 740 with 20% down, what's the interest rate? What's the par rate?
Good question. So I'll go into pricing here real quick. So let's say 740, we do 20% down, and then we go no ratio, primary residence purchase in California. Typically what you're seeing when it comes to the Ally loan, you're looking at 9.25 with 1.75
Oh, okay. So there's
discount points.
Okay.
Yeah, so there's cost to it, unfortunately. The Ally program is never going to be at par.
Okay, that's fine.
I do get requests where, like, Tim, what could I do to lower that? And it's really hard. There's always going to be a cost to it, unfortunately.
Okay.
But there are ways to lower this this interest rate here. So here at Champions Funding, we offer discounts on any loan program, whether it be a primary residence or even investment. When you're pricing out loans here at Champions Funding, this pricing engine is all available for free online. So we'll click CDFI. So from 9.25, the no ratio program typically sees the largest drop in interest rate. So from 9.25, you go down to an 8.875. And then you can click this little caret down here to kind of see what that drop of in the rate was, essentially. EPO period. Go ahead.
So typically this is going to cost, in most scenarios, is it going to cost about 1.75? Is that what the fee is?
It can be it varies on the structure, to be honest. I've seen anywhere from 0.75 up to 1.75. So it varies between those three frames. So anywhere between 3/4 to 1.25 to 1 3/4.
And how do we know that this is the scenario qualifies for CDFI?
Good question. So for CDFI, for the discount here at Champions Funding, the first two are indicated on the 1003. So if you work with clientele that are Hispanic or African American, we're able to give them a discount. If just putting that on the 1003, our system will automatically recognize it, and then a discount gets applied. We're still looking to add, obviously more ethnicities as we move forward. But if they're African American or Hispanic, they get the discount automatically. 3 and 4, Champions Funding, we check on our end in regards to those. Number 3 being if the property is located in a low-income neighborhood.
Oh, okay.
That will also get your client qualified. Number 4 is, so we take, let me just go to it real quick. So we take a 4506C on all loans here at Champions Funding. This is not to qualify them on the loan by any means. It's 3 years, wrong one, 3 years of tax transcripts, but there is a way to expedite it. This is just for us to hold our CDFI license. It's a request from the U.S. Treasury. It's even on business purpose loans, but I understand that obviously on DSCR we're not doing income qualifying, but this is just for the CDFI license. So if they do fill this out and it does show like especially self-employed borrowers that they're not showing enough income and they're below the average income based off where the subject property is located.
Okay.
Then we apply a discount to the file, even if they're below a certain threshold and we're qualifying by other means. This is not going to disqualify your borrower. But the last qualification can actually get rid of this request. If we do run into like a sticky situation as to like even right now, or I don't even know if they're back up, but when the government was down, obviously when you're requesting the 4506C from the IRS, they could probably take some time. And this can actually hold up closings, but there's a way around it. So here at Champions Funding, we do allow for ADA borrowers with disabilities, whether they have mental or physical disability. Obviously, one of the documentation we can do for the client is going to be if they get a medical professional saying, hey, my client has diabetes, cancer, whatever the case may be. But we also allow borrowers here at Champions Funding to go ahead and self-report. So they can self-report indicating they have any one of these line items below. They can choose, arthritis, asthma, cancer, allergies, and it just gets rid of the 4506C request at that point. And then this still qualifies them for a discount. So they'll just put here, I, Timothy Mendoza, physical disability of severe allergies, and then this is kind of what they'll put here. And then you send it in to underwriting, and then the underwriter makes the adjustment, and then we go ahead and we apply that discount to the guy.
Interesting.
So I know we all have allergies.
Wow.
So it's a way to get a discount. I've even had files hold up on CTC just for the LO to have the borrower fill this out. And then you can even do this on business purpose loans. So like if you're doing business purpose loans and you're applying the CDFI discount, then it still applies to this program. But you see less of a difference. So you see 6 and 2.25. So it was reflected on the discount point. So this was at par, and I think this was giving them like an eighth back or quarter back to the borrower. So this is credited to the borrower.
Wow, 80% LTV. That's not bad.
Yeah, on DSCR, we can go as low as 15% as well.
Wow.
DSCR is probably like majority of what I have in my pipeline, to be honest. It's really niche program. I'll just kind of go to the matrix here real quick for you.
Are you seeing in your pipeline personally, are these in California or are you in California?
I'm based in Arizona, but I work with people on the West and East Coast. For a major part of my business is East Coast.
Okay.
I do get, sprinkles here and there in California, Washington, and Oregon, but a lot of my book of business is East Coast, Georgia. Georgia's a hot state right now. And then Jersey and then Philadelphia are a couple other spots. Do you ever run into like, cases where you have opportunities outside of California for business purpose?
We do.
You do?
Yeah.
Yeah. So these pins will tell you which states you technically need a license in. Red pin means the lender, your company has to be signed up in that state, and then the loan originator doesn't need to be licensed in that state. As to if you see a blue pin, then you would need you would both need the broker to be licensed in there, and then the person originating the loan. As to if you're getting stuff in Hawaii, Alaska, Washington, anything else without a pin, you can technically originate in that state without having a license or your company signed up there under the NMLS. DSCR, I think they have like a parameter around just the prepayment penalty. So it has to like reach a certain threshold. Oh yeah, you have to close in a C Corp or an S Corp in order to use prepayment penalty. Like certain states won't allow you to use it.
I do have a couple clients in New Jersey as well who are looking to purchase properties.
Oh, nice. So yeah, if you definitely have some clients in Jersey that are looking to purchase some properties, you'll see here that Jersey is actually one of those states where you don't need a license. Jersey is going to have some interesting restrictions though when it comes to, but other states will allow you to use it. Like Pennsylvania, you have to have a 1 and 2 unit at, like, this is a really random loan amount in order to utilize prepayment penalty is $319,77. So if you definitely have some clients that are looking to purchase some properties in New Jersey, I'll give you my contact information after this phone call and we can kind of chat about it. As far as compensation on consumer loans, you guys are set up on both lender paid comp and borrower paid comp. So you can offer up to 2.75 when it comes to either or. You can't mix both on consumer loans, but when it comes to business purpose, you can actually make front end comp and back end comp. And that's where it gets a little interesting on the structuring side of things, to be honest. So, and it's in order to make back end comp, it's dependent on it's dependent on the prepayment penalty. Prepayment penalties, like if you did a 1 year, you can charge up to 0.5% on the back end. Obviously, that's going to have a fluctuation to the rate. So instead of seeing like 7 3/4, or this is 7 3/4 with back end comp, if I did it just borrower paid compensation, and then you're technically going to look at a interest rate of 7.5, so a slight increase. And it varies, year by year. You can charge more on the back end. If you did a 5-year prepay, you can do up to 3% on the back end. And then you can still mix in borrower paid as well. I have cases where people do both. They'll do like 1-2% YSP, and then your max comp on your max borrower paid you can do is 5% regardless of prepayment penalty. So you can do 3% borrower paid, and then you can still do 3% YSP on the back end.
How does the YSP show on the closing disclosure?
So YSP, it won't. I mean, we can send a fee sheet. We don't disclose when it comes to business purpose loans here at Champions Funding. So it just shows up on the fees side of things. Like it'll just show like their interest rate at 8.25%. Well, this is only principal and interest, but it'll be PITIA. It'll show them the interest rate, but it's not going to show them this this number here.
That's good. That's how we work as a non-del with other companies. So same idea, same structure applies with DSCR.
Yeah. So like if your client does want to see something, we can't. Like we'll just ask our back end team to send a fee sheet. But most times I don't typically get requested to for fee sheets to go out to borrowers. It's like rare, but I do see it from time to time. And then one thing with business purpose loans, if your loan amount is under this threshold, let me zoom in a little bit. We're not going to ask for, where is it at? Sorry, am I in the wrong program? Oh yeah. So we're not asking for reserves under 1.5 million. That's another huge thing. So we don't need to validate how much they have in reserves. We can just go no reserves if the loan amount's under 1.5 million. No need to get additional docs, bank statements, anything of that nature. If it fits within this bucket, then no reserves needed.
What is this program called?
This is the DSCR. So this is the business purpose loan. So we go up to a score of 1-to-1 ratio. We can even go no ratio. Have any of you ran into cases like where the debt service ratio is under 1, and then your client gets hit with a 10% reduction in LTV, and then all of a sudden they got to put 10% down more, or they're losing 5% on a cash out when they want to be here? Well, what I was going to get into is we have asset depletion for helping to bring the score up. So if we're under 1, essentially, we take the assets of your client, we divide it over a 60-month period, and then we're able to essentially increase the debt service ratio by dividing over a 60-month period, whatever they have in, checking, savings, stocks, bonds. So that way we can get this 85% loan of value, or even 75% loan of value on a DSCR. So if we have to use this, great. If we're already at a 1, it technically doesn't make sense to even utilize it, because sometimes LOs were like, hey, let's help the interest, or let's help bring the DSCR to a 1.25 because that's going to be a better rate. Once you get to a 1-to-1 when using asset depletion, there's no sense in going any higher than that, because the asset depletion is always going to have a cost to it. It's always going to be a hit. But this just saves cases where we're under a 1, maybe on a cash out, we're at 70%, but the client's really needing that 75 to help pay off some debt, liabilities, get some extra cash in hand to help purchase the next property. So that's primarily what it 100% should be used for.
So we use the asset depletion amount towards the potential rental income?
Yeah, towards the rental income. So, because here at Champions Funding, even if the property is vacant or if we have a lease agreement, and it's lower than the market rents, we take the higher of the two. But if both the lease agreement and, you know, the market rents that the appraiser says, you know, the subject property should be, then we can utilize asset depletion, and then we divide it over a 60-month period, and then we apply it to the PITIA at that point. But we take the higher of the two when it comes to lease agreements and or the market rents. Short-term rentals, you can't do asset depletion. That's the only thing. You can only do it on long-term rentals. And then let's see what else.
Can you go over the cash out seasoning on a non-QM loans? I saved.
Really good question. Actually, that actually was my next step. So cash out
That's my
seasoning.
purpose of inviting you to this call.
No, you're good. So no cash out seasoning here at Champions Funding. The only program that has cash out seasoning is the No Doc program. That program too, the Ally program, has title seasoning. Other programs here at Champions Funding do not have title seasoning either. So if you had a client that was refining out of their property, they just got put on title, we can do a cash out right away technically. Or if you have investors who are purchasing properties and they're putting renovations into the property, maybe they've only owned it for 2 to 3 months, and they go to you like, hey, like I want to, you know, how long do I have to wait in order to do a cash out? Most lenders are anywhere between 6 to 12 months, but we don't have no seasoning here at Champions. We can refi, you know, get them extra money in their pocket, get part of that money they got put down for the renovations, and can then just go forward from there. So the only program that has cash out seasoning is going to be the No Doc program, is the Ally. Otherwise, no cash out seasoning on any other products, even I-10. Do you guys ever come across like multi-units at all? Like 5 to 8 units?
We did, but the rates are too high. There's a bank offering 7%, 7/1 right now.
7%. Yeah, that's hard to compete. Yeah, 5 to 8. Yeah, 5 to 8 units is a little bit tougher to get interest rates in that range. I would be completely honest. We're in the 8s, to be honest, depending on how we're structuring the file. A little harder to get approved, and then 5 to 8 units typically doesn't have any exceptions on it. It's a pretty strict program. We always look for experienced investor when it comes to 5 to 8 units. As to if we were doing, you know, a 1 to 4 unit here at Champions Funding, we can actually qualify as somebody being a first-time home buyer, first-time investor, no mortgage history. Maybe they're living with their spouse and they want to just purchase their first investment, whatever the case may be. First-time investors, first-time home buyers are allowed on 1 to 4 units, just not the 5 to 8 units. Experienced investor is classified as somebody who's had a property for 12 months within the last 3 years. What else are you guys typically coming across as far as like opportunities out there? Like what are some like hiccups that are causing some fallouts?
In New Jersey, there's a lot of properties that are basically like dual use. So it's like a commercial and then someone living on top. Like
The mixed use properties?
Yeah. Yeah. How would you go about that?
Mixed use properties are a little tricky. The only program that has no problem with mixed use properties is going to be the Ally product, the No Doc program, but again, it's going to be at a higher interest rate. But if the property itself is receiving income, like it's really case by case when it comes to mixed use properties. If it's zoned primarily residential, we can definitely take a look at it. I just funded one that had like a barber shop in front of it in California, but the back part of the property was primarily residential. But the barber shop wasn't even open yet. So because it wasn't receiving like income on the property, we could go DSCR. But if the property is truly mixed use and they're actually receiving income from that bottom portion, then DSCR wouldn't work in that sense. It would have to go Ally. And then that's gonna obviously be a little bit of a higher interest rate if it comes to it.
Okay, thank you.
Yeah, no problem. Anyone else have any other questions pertaining to like anything else? I mean, it came up that yeah, go for it.
For your DSCR loan, I think I saw the verbiage saying that you guys are allowing gift funds,
Yeah, so gift funds are allowed for down payment and closing costs up
not
to
for
100%.
reserves.
Well, yeah, not for reserves, unfortunately. But again, if the property value is 1.5 million and under, then we're not technically going to need reserves at that point.
Okay. Do you guys require minimum borrower's contribution?
That's a good question. The only one that does ask for that is going to be I-10 borrower. Otherwise, 100% of the gift funds can be gifted by some, like a relative or somebody, for down payment and closing costs up to 100% of the value when it comes to DSCR.
Okay. And also when we are using asset depletion, when we calculate the DSCR, can we use borrower's checking and savings as well? Is there any like types of account that we can use?
Yeah, so for asset depletion, you can use any of these accounts. So where is it? So you can use anything that you know, obviously banking wise, but you can also use 401k, stocks, bonds, 70% of the value if they're not of retirement age. If they're under 59 and a half, they can even use business funds if they're business owners. And then you divide it over 60-month period. When using asset depletion, this is probably the key point just to take into account. So we just need the money season for 3 months. So if they happen to have money in crypto or if they have money in Bitcoin, then that money would have to be transferred over 3 months in advance before we're able to utilize those funds as part of asset utilization.
Okay.
Good question, though. Yeah, no problem. Any other questions by chance?
Actually, I have one more.
No, go for it.
The borrower recently converted the subject property into rental property. It's refi transaction. If the borrower recently converted the property to investment, is there any other overlays? Can we still do it as DSCR?
They have it as a long-term rental right now?
Yeah.
Yeah,
Like, do you
can
guys
do it.
require lease agreement and security deposit with first month rent? Do you guys
No.
require those documents?
So we don't require, that's fine, like we'll be able to lend on it, so we're a champion fund. The properties need to be vacant. Sorry, I was putting my charger on, but yeah, the property can be vacant. That's not gonna be an issue. So the property can be vacant and we don't need a lease agreement in place. If it's a vacant property, we can just go based off market rents to help calculate the DSCR for it.
Can you confirm that?
Yeah, so I'll go, sorry, I'm reading here.
So the scenario is, and I have one similar scenario, is borrower has a quote unquote rental property and it hasn't been occupied by a tenant nor the homeowner themselves for whatever reason. And they want to take advantage of doing, let's say, a cash out. What we're running into the issue is because it hasn't been rented out, they can't do it.
Yeah, that's fine with us. I highlighted it here in the guides. So vacant or unleased properties is allowed without any LTV restrictions.
Wow. Okay.
And then this is where we'll go to, like, let's say we did have a lease agreement in place. I'll call you after. So if the market rent is higher than the lease, we can go off the higher of the rental income. So we can go based off the higher of the two. So if the lease agreement is higher than what the appraiser is saying the market rents to be, we'll go off the lease agreement. If the market rents are higher than what the lease agreement is, we can go based off what the market rents to be. But if we're going off the lease agreement, we're going to need evidence of 2 months of receipt payments just to validate, they received those. They're receiving that, that dollar amount per month. So vacant properties are totally fine. That's not a hiccup. Basically, the property. What's the issue with the property? Was that the only issue with that one?
And there's no issue that it's just been vacant. They weren't sure at first when they acquired it. They did renovations and it wasn't extensive at all. And then they were going to rent it out, but they didn't end up renting it out. And
So
they've had family come and use it once in a while. And they just kind of kept it out because it's free and clear. So they really didn't have they weren't really, they weren't in a bind to get this rented out right away because it's free and clear.
No worries.
Yeah.
So yeah, I mean, we're fine with that. So
Okay. Good to know.
Vinkit's fine. Remember, no cash out seasoning when it comes to DSCR. So he could have owned it for like 3-4 months free and clear, and we could do a cash out right away.
Great. Thank you.
Yeah, no problem, sir.
Quick question. You use
Yeah, cool.
actual rent versus market rent, whichever one is higher.
Correct.
How high can we go with an actual rent?
Like as far as DSCR score?
No, let's assume market rent is at 4,000. Can the actual rent be $8,000 a month?
Yeah, that's
And
fine.
use the $8,000 a month by showing 2 months of account receivable deposit.
Correct.
Really? There's no cap.
There's no cap. We go off whatever is higher of the two.
Can the tenant be a commercial company?
No commercial property. So here at Champions Funding, it's primarily only residential.
Residential?
Commercial, if it's like if there's an office space, or if it's like a retirement home or something of that nature where it's not zoned residential, then we wouldn't be able to lend on it.
So this is another case. A retired home doctor leased a single family home. Market rent is $6,000. He's paying $20,000 a month right now, but he had denied because the landlord is making a income from, it's a personal name showing on the lease agreement, but the property is being used for the business purpose.
So his name is on the lease agreement?
Yes, the doctor's name. So on the paperwork, it looks perfect. But when we went out to do the appraisal, the appraisal report showed interior was used for the commercial purposes. And second, the investor gave us a cap of 125% higher from the market rent. So we got a counter approval right now.
And that's a DSCR, correct?
Yes, sir.
What's the commercial? What's the purpose of the property he's using it for?
It's the retirement home.
Yeah. Okay. So a retirement home wouldn't work for us, unfortunately. But
Even
we could have
though
gone.
the leaser and leasee is personal.
Yeah. Like the hiccup with that is when we do the hiccup will be like if there's like exit signs on the property, or if it's truly being used for retirement purposes where you have a bunch of elderly, then it would honestly, like I'll be completely honest, it would be a hiccup for Champions Funding. If you have a copy of the appraisal, I can take a look at it, but more than likely that's probably something that wouldn't work with us, unfortunately. But good scenario though. Is that one a California property?
Yes, we have many Woodland Hills, California single-family homes and Glendale,
Nice.
California single-family homes being used for the commercial purposes. I've been only sorting them out using hard money loans, but I'll look into it more. But yeah, I think I have if we can use higher rental income than the market rental, then we may be able to market that.
Yeah, and then we can help some of your clientele get some deals done for them. Another thing too is that what sets us apart from other lenders is lenders out there. You're going to run into a cap hit when it comes to how many loans you can do for an individual. I don't know if you guys have ran into this before, but if you had somebody because typically the cap is 10 loans, $10 million, no more. We're not able to allow your client to, get any more loans out of Champions Funding. We can actually go over that. There's basically, I haven't really seen a cap. The most I personally done for somebody was 53 refis. So if you have a borrower who has quality FICO score, quality experience, they're a strong candidate. The first 10 are gonna be no exception, essentially. But all the ones they want to do after that are gonna be hit with a slight bit of a cost. But they can do loans with Champions Funding, and there's no really cap to it. We'll just have to look at each individual one you submit afterwards. as far as like review, but more often than not, I've seen well over 50 get accepted for one client. It just has to go to our investors at that point for them to, see if they're willing to entertain it. So typically they'll probably look for anything between a 720 to 730 plus FICO score. And then obviously they want to see that, that history of, owning those properties for sure. But yeah, I mean, we have a lot of niche things here at Champions Funding. The process is relatively smooth too. Business purpose loans, you're going to close anywhere between, just dependent on how things are moving, how speedy things are getting as far as getting conditions back and all that fun jazz. It can be anywhere between 20 to 30 business days. And that's relatively the same when it comes to consumer loans. You can close a little bit quicker than that in some cases. So when I work with loan officers and processors, I tell them like, hey, as soon as you get that initial condition list, go ahead and order the appraisal right away. So that way we're not missing a beat here. And then that way we're not missing, because time is of the essence when it comes to, doing a lot of these loans, I feel. So I like to be on top of it, tell my LOs, the people that I work with, just be sure you order the appraisal right away, lock it as soon as you can. You can float and continue, but again, it's subject to market changes at that point. We're not going to be able to go back in pricing, unfortunately. So it's subject to that day's pricing. Any other questions regarding any other scenarios when it comes to I-10, maybe people with EAD cards, visas? Our visa list is actually pretty expensive when it comes to what we allow. Permanent asylum, COAs accepted, H-1 visas accepted. So if you have clientele who have those visa cards, they're not going to be hit with the difference when it comes to rates either. It's going to be relatively the same. So even if this was a non-permanent resident, 6.9 rate, we shouldn't see a increase in the rates. Actually dropped it down. That took me a little bit for a surprise. So I guess they have a little bit of lenience when it comes to business purpose loans, but for the most part, rates for non-permanent residents are going to be relatively the same. For national, are going to be a little bit higher. And then obviously I-10 is going to be between 8% typically.
Right.
Timothy,
Yes, sir.
what's your schedule like next Tuesday, 14th?
I have one presentation next week, but I think that's going to be in the afternoon. My day to day kind of fluctuates. So if there's a time frame you want to chat on the phone or hop on another meeting call, I would just have to plan that ahead of time. But my days kind of fluctuate day to day, depending on what's closing or what's trying to be submitted or people reaching out about new opportunities out there.
Is it okay for us to ask for maybe 20 minutes of your time next Tuesday in regards to the non-permanent residents and foreign nationals? We don't want to extend. We have a hard stop coming in 7 minutes, but at the same time, these two usually come in a lot. We have a lot of Hispanic and Korean communities who's going through this issue since FHA Gateway is closed since May.
Okay.
So we were sorting out using Dream Builder product from another lender, but I think having your product with Dream Builder, we can help IT and non-permanent resident as strong as the FHA products that we had before.
Definitely, yeah. I'm more than happy to set time aside to kind of go over those specific products.
So how about next Tuesday, 9:45, the same time?
Yes, that works for me.
Okay, Brenda, help us to set up a schedule. Send them a custom link once again. Thank you so much for, Timothy, thank you so much for hopping on today. There are too many takeaways.
There's a lot.
We'll create a overall summary versions of today's meeting, and very excited. We have to go back to all the canceled and denied loans earlier this year.
There's definitely some opportunity I'm sure we can probably put together here for some of your clients. So definitely shoot me anything that you feel like may work for Champions Funding, or if not even that, I'm more than happy to take a look at it to see what options we have. So if I can't fit somebody in the no ratio program, I'm always happy to look at other avenues as well. We even allow for non-occupant co-borrowers to help, family members get into a home. That's another big piece to it as well.
Let's I'll make a notation out of it. Let's continue where we left off today without with the non-occupant co-borrower. That's another key thing that's very different than Change Wholesale. There's a reason why we didn't invite Change Wholesale. Champions Funding has a little bit of more expensive lender fees, but the underwriting guidelines is different game. It's very, very different than Change. So
Yeah, for sure. So I'm more than happy to definitely entertain the Foreign National and, you know, the I-10 Visa cards as well next week.
okay, thank you so much, Timothy. Appreciate it.
Yeah, not a problem. I appreciate your guys' time today. Pleasure meeting everybody.